Now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 17th day of December, 2019. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, point into any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. All right, let's have a look at a chart. S&P 500, Emini Futures. Let's take a look at a daily chart. That's soybeans that you see right now. But let us go to the S&P. We are trading the H contract now. We have left December in the rearview mirror. And this is a 30-minute chart, so we're going to make that a daily chart. And there we have it. Onward and upward. Okay. We'll do as we've done for quite a number of days. Here of late, we'll use our Fibonacci price extension tool, and we'll go from the swing low put in October 3rd to what was once the all-time historic high put in on December 2nd. Then we're going to connect that to the swing low off of the previous all-time historic high. And using simply math, no politics, no hijinks, just math, Fibonacci reaches from the 14th century to tell us that the next logical mathematical spot for this market to reach right there, 3219/20, we'll call it. This is the 24% Fibonacci price extension, done. Here's the 38% extension, done. And we're halfway or better to that 50% extension. And what do I mean by extension? Well, if we take this low, and that low was 28.55, the distance from that low to this high, 3159.75, we've accomplished in a very short period of time almost 50% of that move. Now, in a short time, look at the days involved. October 3rd to December 2nd, and then December 3rd to just December 17th. So in 14 calendar days, we've almost traveled half that distance. Okay? What comes next? Only time will tell. Got a very quiet session going on today. Has been since the Globex opened last night. In fact, this week has been a bit of a slow week as we head into Christmas trading, which historically can be pretty quiet as folks take time off away from the markets to spend with their family and focus on the things in life that are really important. Not that the markets aren't important, but you know what I'm talking about. Chestnuts roasting on an open fire, a little snowfall looking out the window. Everyone's life becomes a Thomas Kincaid painting. Let me give you the numbers from around the world real quick. Pull in some fresh data. These are the cash markets. Starting here in the US, currently the Dow is up 72 points. NASDAQ is up 3. S&P 500 up almost 4. And the Russell 2000 up 2. In the commodity basket, crude oil up 65 cents, trading 60.86 last. That's a gain of just over 1%. And that's one of the biggest movers we have today. Gold down 60 cents, trading 1479.90 last. In the Asian markets at the close, Nikkei posted a gain of 113 points. Shanghai gained 38. The Hang Seng, another mover and shaker, up 335 points on the session. That's a gain of about 1.25%. And in the European markets at the close, FTSE posted a gain of 6. The DAX lost 119. That's almost 1%. And the CAC dropped 23. That gives us a green day in Asia. It is a mixed day in the UK. And so far, it's a big green radio Tuesday here in the US of A. Let's go to Michael and get a recap of what happened in the live training room this morning. After that, I'll be back. We'll talk with John, I believe. And of course, we'll take a look at the Concierge Trade Alerts from last night. We'll take a look at Logic 247 for the week. All that and answers to your questions when I return. Michael, it's all yours.
Okay, I got it. I got it. You should be looking at my charts.
You got him.
Okay, good. Let me go down here. Bring this up. Alright. Good afternoon, everyone. Today is Tuesday, the 17th day of December, 2019. If you have not taken a free trial with us, go to the homepage at CFRN.net. And right up here in the very top, over here in the right-hand column at the top, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page, eminitrainingschool.com. Well, all we ask for on this page is your name, your email, and your phone number. Click on register now, and you'll be sent a confirmation link. You must click on that confirmation link, because we don't know that you took the free trial until you do. Okay. Next would be this spreadsheet. Here we go. Today was, as Dwayne said, it was a quiet day. There was opportunity, but we were going into the highs and lows of the day frequently, and that will disqualify a trade sometimes. Today, the 17th day of December, 2019, we made 8 ticks on the ES. That was all we did. It took us 48 minutes and 2 trades to get to $100 a contract, and we took a total of 5 trades. So I had 4 break-even trades and 1 +8 tick trade. All right, so that puts us at 1,012 on a month. That's over 12 days. And on the year, we are now at 34,847. That's over 229 days, averaging 152 per day. Okay. Now, come here and we'll look at gold first. Okay. We missed a nice trade here, but we were in the yes trade when this one happened. And that would have been probably another 8 or 10 ticks, probably. We got a break even right here. And that pretty much wrapped it up for the morning session, for me anyway. And let's see. During the break, well, you couldn't do this because it would have been a momentum trade going into unbroken dynamic support. So you wouldn't be able to do that. Over here on the euro, we missed a trade here that would have worked out. In the pre-market, it had some pretty good movement. You see that in the pre-market. Leg there, a leg there, a leg there, a leg there. And then, we didn't get much movement at all after that. There was 1 leg there that would have been okay, and 1 trade there that would have been a break even. And it didn't do anything during a break. Crude oil. See, crude was going up, but it kept pushing the high of the day every time it cut one of these legs. Okay, then it reset the cycle, and again, it was pushing the high of the day. We had 1 break-even trade right here. During the break, you could have shorted, not there, nowhere. There are no trades during the break. The ES. On the ES, we started out here with a break-even trade. Then we picked up 8 ticks on the second one. And then here, I missed that one right there. And then we got another break-even trade right here toward the end of the morning session. Then it looks like there's another momentum short right here that went a little ways, but not far. During the break, nothing. So it's pretty quiet trading today. All right, so let's bring the spreadsheet back up. Today is the 17th day of December, 2019. I made 8 ticks on the ES, $100 per contract. Today it took 48 minutes and 2 trades to get there, and we took a total of 5 trades. All right, that puts us at 1,012 on the month so far, and 34,847 on the year. Now again, this is 1 contract, 2 hours per day. And as you can see, I miss a lot of trades because I'm answering questions and stuff. Yeah, so all that. If you have not taken a free trial with us, then you simply need to go here to the home page at CFRN.net. And in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page, eminitrainingschool.com. And on this page, all we ask for is your name, your email, and your phone number. You hit register now, and you'll be sent a confirmation link. Okay? Just click on the confirmation link. You have to click the confirmation link. We don't know that you took the free trial. Okay. And that was it. That was it for the morning session. Yeah. So with that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay, and just so you know, we rolled to the G. We rolled to the G contract in Crude today.
Okie doke. All right, let me make a note of that. Okay. All right, let me grab the charts.
Okey-doke.
And recap of the recap.
Today it took 48 minutes and 2 trades to get to $100 per contract.
It's good bingo. For a quiet day.
Yeah.
All right, let me drag a chart up here. Crude, the big mover and shaker today, I guess.
Yeah.
Here it is
really
on
was.
a 4-hour chart. Now, from a monthly trading zone perspective, we've only got one more zone overhead, and it is a little ways up there, but we just may see it. 63.90/95. So there's the 95. Yep. Okay. And here's the 90. Do we have any econ reports this morning?
Yeah, we had a bunch, actually. We had, hold on, most of them were good news today. Yeah, I got it right here.
Investing. As Michael and I use different economic calendars, but you can, it's just a matter of personal preference, so you can use whichever one. Now, in fact, the DT Pro platform, it has a feed, but I'm not sure, I don't think I've ever, I know I've looked at it, but I just don't think I've ever used it, only because I got accustomed to the look and the feel of this one, and the little spearheads and all that.
Yeah,
Let's
I'm
see.
used to mine.
This morning, here in the U.S., started out with building permits and housing starts. So both of those numbers were better than expected. And then we had the JOLTS job openings. And that was better than expected. What is the JOLTS job openings?
It's the number of new non-farm jobs added to the economy.
A specific position exists and there is work available for that position. The job could start within 30 days, whether or not the establishment finds a suitable candidate. There is active recruiting for workers from outside the establishment location that has the opening. Now that's an interesting part of this figure. In other words, what they're saying, I guess, is that they're not just hanging a help wanted sign in the window or running an ad in the local newspaper. they've actually hired a firm to do some recruiting and, attempt to find a suitable candidate for the position. Is that what you would take from that? Let's see. There is active recruiting for workers from outside the establishment location that has the opening. Okay. Fair enough. And the next one on the list, the Bank of England, Governor Carney, he's going to speak here, or he's speaking now. Is that right? No. At 2:15 he's going to speak. That's kind of like our Fed speaking. And then that's it for today. What do we got coming up tomorrow? Tomorrow, Wednesday, here in the U.S., we've got absolutely nothing high impact. I was hoping to see, we got crude oil inventories. That's really the only thing. I was hoping we'd see something that might put some fuel on the fire and get the market up and moving. Here's the whole shooting match. So I'll scroll down to Thursday. There's Thursday. Okay. Thursday, the Philly Fed. Got that at 8:30. That's high impact. And then we got existing home sales at 10 a.m. Eastern. That's high impact. And that takes us into Friday. And Friday, we got GDP out of Great Britain. And in the U.S., we got GDP. That's a big one. And that's it for the week. Yeah. So there's not a lot of fuel to be thrown on the fire from an economic report perspective. I am interested to see what's happening with Boeing. They have, I just saw a headline, they've stopped, and this may not be new news, but I guess it's new to me. Boeing, let me get a chart. They've stopped production of the 737, and apparently the market is taking that as a good thing. Let me get I'm trying to get a chart here. Alright, do that. And I got my trading view charts all messed up. I got to go in and fix my template. So remove all indicators. Just give me a clean chart, please. There we go. With price on the right side of the chart. Okay, here's Boeing. They stopped production of the 737. Again, I don't know if that's new news as of today, or if it's something that came out earlier. But this is a daily chart, so we had a huge gap lower open yesterday. Perhaps that's when the news came out. And once investors had an opportunity to digest that information, they realized it might just be the best thing. Because if this thing continues to climb, this could become a bullish engulfing, but I don't think there's enough hours left in the day. If you take into account the wick, and I do, so some don't. All right, guys, so we know the deal on crude. We got one more weekly zone overhead. I had drawn this trend line. This was a pretty steep climb already. So we were watching to see if we would break that trend line and head back to the zone below. In fact, when we had just this wick sticking up overhead, I mentioned in the Telegram, I posted it in the Telegram discussion group, as that looked pretty bearish, but then price just kept creeping, and then we consolidated for 1, 2, 3, 4, 5, 20 hours, almost a full 24-hour day, and now we're up substantially. We started the month out right here, December 1st, below this zone. So we consolidated, and then in just 2 4-hour candles, we not only made it to the zone overhead, we closed that 4-hour period above it. So we had a leg, we had a retracement right back to the zone, which then took us almost to the zone overhead in 1 4-hour period. And that brings us to where we are right now. Looking bullish. Okay, I'm going to drag up well, let's look at a recap of logic first. All right, we are in week 72. And as Michael mentioned, crude, we rolled today to the G contract. So GCLF that you see on today's charts, tomorrow and tonight, that will become GCLG. As of 11:30 a.m., 12 alerts for the week. That's one of the, well, it's a mirror of what's happening in the market. And when I show you the ES in just a second, you'll kind of get the idea. 12 alerts issued. I don't know if often, we've quite often have more alerts than that issued on just a Sunday night. But we've got 12, 3 never triggered. It gave us 7 actionable alerts. So far, nothing has stopped out. Let's see what the rest of today brings. And we'll take a weekly look at that right here. Last week, we had a total of 47 alerts. Logic, not Concierge. The logic alerts are based on current price action. Logic is based on current. Concierge is based on previous. And with the 2 point at the same important price, important area, that almost always deserves a second look. So there's 47 alerts issued last week. 5 never triggered. We had 1 carryover, so that was 41 actionable. Out of the 41, 7 of them were stopped out. So that's 17% of actionable alerts. Which brings us to week 72. Now, some of you may not have heard of the rule of 72. So if you don't know what that is, it's kind of important in economic circles. The rule of 72 is a simple way to determine how long an investment will take to double given a fixed annual rate of interest. By dividing 72 by the annual rate of return, investors obtain a rough estimate of how many years it will take for the initial investment to duplicate itself. See if they give us an example here. Here we go. All right, the rule of 72. If you invest $1 at an annual fixed interest rate of 10%, it would take 7.2 years for that $1 to grow into $2. In reality, a 10% investment will take 7.3 years to double. The rule of 72 is reasonably accurate for low rates of return. The chart below compares the numbers given by the rule of 72 and the actual number of years it takes an investment to double. So, if you invest $1 and you get a 2% rate of return, it's going to take, the rule of 72 says 36. Now that's the actual number of years it takes an investment to double. Most banks today pay less than 2%. So I'm not knocking saving your money. I think that's very important. And Americans have been under-saving many other nations, what would be considered poorer nations. Our savings rate is pretty dismal. And part of that, I guess, could be accredited to the rate of return that banks pay. The flip side of that is we have benefited from unusually low interest rates for the purposes of things such as buying a home, buying a car. Now, if we get up into, let's see, 9%, rule of 72 says it's going to take 8, and 100%, you're going to get there in 7 months. A 72% rate of return. Now this seems incredulous. Well, who pays that? Well, no one pays that. It is possible to earn that. Savings is a passive thing. You put your money somewhere and you just kind of forget about it best you can for a while and let this happen. Putting your money to work is a whole different thing. That's where active investing and trading comes in. For those who are, looking to grow their money, they have to turn to something outside of the standard financial institutions. So, since this is week 72, I thought I'd use that as an opportunity to tell you about the rule of 72. Sunday night, the gap open on the S&P did not fill, hasn't filled, I guess. And on the NQ, same thing, no trigger. We had an S&P long, thumbs up means we found the target. Russell, the Dow, Crude, this is the one we're rolling. We're rolling that to GCLG. Now, some of you that are on a different platform than we are, if you're using a different charting platform, you may not have that G in front of it. Your symbol might simply be CLF, which will become CLG. Short on gold hasn't happened. This was a carryover, never triggered. And then S&P, Russell, gold. That one hasn't come to fruition. And the last one, long the S&P, that one found the target. All right. So now we'll jump to the Concierge Trade Alerts. This is a static report issued every evening shortly after the Globex Open. I always strive to get it out between 6 p.m., which is the Open, and 9 p.m. Eastern. Most days I accomplish that. Last night they got out just in the nick of time, 8:55 p.m. Eastern. If you want to grab a screenshot of this, now because the markets are so quiet, won't be a whole lot to see here, but we'll take a look anyway. Okay, we'll go to the S&P. Okay. Let's open it up. These are last week's weekly trading zones. The current weekly trading zones are issued every Monday morning, 6:15 a.m. Eastern, to all partners and passport holders. And then I bring the audience to the party on Thursdays. That's the day that I make the zones available to everyone in the CFRN audience. And if you jot them down, you'll find that often they can be very beneficial. Thursday night when Globex opens, Friday, Sunday night when Globex opens, Monday, Tuesday. And as the week progresses, the new or the current weekly trading zones kind of take the ball and run with it. This is what we call a sideways market. Since yesterday at high noon Eastern, we put in, we poked above that a little bit. We got a swing high of 32.03, and we got a swing low of 31.91. So from 91 to 03, is that a 12-point range in a 24-hour period of time? We've really gotten spoiled these last few years with the incredible volatility that we've seen in the markets. Now, investors typically don't like volatility. Traders love volatility. In fact, if you're an Emini Futures trader, you really don't care if the market's moving higher or moving lower. You just want it to move. And this is a market that's going nowhere fast. Probably the best thing that you can do in a market like this is absolutely nothing. Of course, we show up every day anyway. Michael continues to train in the live trading room. It's certainly a more difficult task in markets like this. I continue to put out alerts as opportunity develops, but as evidenced by the recap I just showed you of Logic. And Logic is a 24/7 service. We start Sunday night, 6 p.m. We keep at it until Friday afternoon, 5 p.m. around the clock. And to think that I only found 12 instances of what I consider to be good opportunity, that really paints a picture here that, well, we hope that picture changes. That's why I was combing through the news looking for that fuel on the fire that might get this thing up and moving. Now, what's our holiday schedule, Michael?
I think what I was thinking is I'm probably going to be traveling Tuesday and Wednesday.
Okay.
So on Christmas Eve and Christmas Day. So probably Monday, Thursday, Friday.
Okay.
Next week.
All right. That sounds good. Now, as for myself, I won't be traveling. So we might do a Christmas Eve show where I just chat with John for a bit, but we certainly won't be encouraging anyone to get out there and get busy in the markets. Take some time,
Right.
you with your family. So maybe we'll even have a special guest come on. I don't know. Maybe we'll have Santa Claus come on.
There you go.
Yeah.
There you go.
He can read from his mailbag. All right. So last night on the S&P, the alert said to consider being long 3198. Now the alerts came out at 8:55 p.m. So that's going to be, what is that? That's going to be 20. Got to find the 2030 candle. There it is. Because 2100, that'd be 9. So on this little candle right there, that's when the alerts came out. And again, it was to consider being long 3198. Important prices, important areas are almost always tested, even in markets that don't have much volatility. So from 3198 up to the swing high at 3202. So that gave us 4.25 points. Price got back below the trigger. We made another run at it, and this time it gave us 5.5 points. We got back below the trigger. It gave us another 4.25. Got back below the trigger, and we're in the 1, 2, 3. We're in our fourth trigger, fourth move so far in quiet markets. John, welcome to the show.
Hi, thanks. Sorry I missed you the last couple of days. Been trying to get on yesterday, but I think you were in a conference with somebody. So
Okay. Well, we're glad to have you with us today.
thanks. Well, a couple of things. If you remember, back in August, when everybody was calling for a recession, I was singularly, and I was a pretty lonely bull at the time, and I was singularly bullish on the future. And I said the surprises are going to be on the upside. And I think the Washington Post came out a couple of days ago and basically called my sentiments to the T, basically saying that the economy had shrugged off recession fears in August and has morphed into an incredibly powerful up leg. As per, I don't know whether you saw the JOLTS came out this morning.
Yeah, we were just talking about that.
Right, not quite an all-time record high, but the gap between the openings and the
It was better than expected.
right. So this is a pretty strong, continuation of. 7 million job openings is just nothing short of phenomenal, and the economy is tightening up. Peter Schiff, who's a perennial gold bull. He came out. I just noticed an article he put out this morning or yesterday, basically saying the Fed, now that Volcker died a few days ago, God rest his soul, he, it's almost like maybe that's a kind of the Fed is shifting into an inflationary mindset where they're going to ramp up the economy and inflation. All the Schiff is saying, be careful what you wish for. If you play with fire, you might get burned, and probably that's what's going to happen. A good look. Right now, you've got oil really starting to look pretty bullish.
Yeah, it really is.
Maybe that 500,000 cut is helping by OPEC. You've got the momentum of the biggest IPO in history. Aramco, which is trading around $2 trillion or so right now.
We only have one monthly zone left overhead, John. It's up at 63.90. But that shows you how bullish crude is, yeah.
Yeah, and look, most people have been saying, there's been some reports saying, they're going to be a glut in 2020, and then there may be. But I think this first 3-4 months of the year, going into May, going into Memorial Day, generally are very bullish periods in the oil market. So I wouldn't bet against them. It may not be as strong as a year ago or the last few years, but given the kickoff here in December with the cold weather and everything, it's certainly starting to look pretty bullish. So, and even though we're supposedly a net exporter, the shale. Remember, this shale is not an endless pit. It has a limited lifespan, and there may be some wells that are starting to underperform. So there could be some tightness coming into the market, during 2020. But remember, with the you're seeing big pickup now in the Chinese stock market. Remember, there's an awful lot of people in China need oil. They're using more oil than ever.
Once upon a time, everybody rode a bicycle, but that's changed.
Right. And look, 100 million barrels a day, north of 100 million usage, is a hard thing to deliver. You're delivering 100 million barrels a day. It's a tremendous amount of product. You got the North Sea is tapering down, the Alaska pipeline. Some of these, you got the danger of a Saudi well maybe not producing like they used to be able to. They're not the biggest producer of oil anymore. The US
is it just running dry? Is that the issue?
Well, look, there's definitely a danger of a glut. Remember, there's been a real dearth of new development, especially offshore, in the last few years since 14. It's 5 years now where they really have just slashed exploration costs. And there's a real chance, and we've been through this before, where the electric, even though the electric is a component, an increasing component, it's a long way off from mainstream. And it's a very real chance that we could have some tightness in 22 or 23 that could coincide with a similar experience to what happened in 1979, 1980, when oil spiked way up. There was there were two oil shocks in the 70s. There was 74, and then there was 80. And it could be, we could be going into some sort of maybe back up to $100 a barrel or something in the next year or two or three. Going into 2023, especially if the dollar gets weaker, that could in of itself, the dollar gets cut in half. The price of oil is likely to go up, accordingly. So that could put the oil back over $100 a barrel. That would be very inflationary. So the inflation is, it's likely to come from behind. when you look at, we've talked about this before. I remember paying like $1,000 back in 2000 for some memory back then that wasn't, like a fraction of what you get today. Maybe it was a gig or something.
And
today
that was a big deal. I mean,
right,
that was a big deal.
And look at Micron, by the way, speaking of memory, look at Micron, MU technology. It's
MU, okay, let's go there.
It just got upgraded. Excuse me.
Okay, there's a daily chart.
It just got upgraded yesterday by Susquehanna, and they're pretty clever people. They upgraded Western Digital and Micron, and Micron's breaking out now to the upside. The whole tech sector. I mean, look, the tech sector is just incredible. It's up again today. It's making new all-time highs. SOXL, if you want to put it up.
What's the symbol?
Sorry, SOXL.
Oh, this. Okay, the soft. Gotcha.
Yeah.
Okay.
It's looking a lot like 99, going into the end of 99, where these things were accelerating higher. We said the market would finish strong going into the end. Look at that chart. I mean, is that awesome or what?
That's pretty incredible.
It really is. I mean, this thing's going to go parabolic. It already is going parabolic. It's going to spike.
Looks like my data only goes back to 2010.
Yeah, how about that? So that's when the thing started. That sucks.
Oh,
so
okay.
you don't get the
you don't get the previous right. Yeah, no, I understand.
There is a 3-letter symbol for the same thing that goes back.
Is it
to
just
2000.
the socks, perhaps?
Might be. Yeah, there you go.
Let's try that.
Yep, there you go. Look at that. We're way above the previous high.
So this
Way
high, gosh, that was 362.
Right. It's kind of interesting.
That's not right.
Kind of interesting, that chart, Dwayne, where you see.
1362. I'm sorry.
Yeah. You look at the run up that we had back then. It went from 200 to what, 12?
Almost 1400. Almost 1400.
Yeah. So this was just. This is what we could be in for here. We're going into a whole innovative.
We doubled right here. I mean, we caught a double from 2016 to 2018.
Right.
This is what this is May of 16 up to March of 18. We went from 600 to 1400, more than a double.
Yeah, that's if you can put Intel up, INTC.
Okay.
Sorry, IN.
I went one too many ends there. There we go. Let me go to a daily. That news on Boeing that they're stopping production, did that come out today or yesterday?
Yesterday.
Okay.
Yesterday.
That explains.
Yeah. I would be, in spite of that, I think, as a matter of fact, I was going to put a buy stop above the market on Boeing, because if they come out with some good news, you just can't catch it. It'll be up $20 before you know it. Same thing with Tesla, which hit an all-time high yesterday, virtually.
Well, you see this, John, right here. We had that gap lower open yesterday.
Yeah.
And this, I mean, if there were enough hours in the day, this could become a bullish engulfing candle here.
Yeah, no, you're dead right, and that's what I was expecting. I was kind of looking for that today. Unfortunately, I didn't catch it this morning. I was kind of too busy. But remember we actually, this is a very interesting chart to look at, because we were talking about Tesla a few months back, and I said, every dip, buy the dip, because this thing could turn very bullish again, and so by magic it certainly has. So this is I wouldn't be backing up the truck just yet on Boeing, because there's still some risks with this company. But if it exhibits, look, I would trade this on a short-term basis, and if you see a decent kind of a buy signal, I'd kind of go with it. And I would probably put a buy stop above today's high in case they come out with some news, because I believe that it would go back up and test that gap yesterday, and if it gapped higher, then you'd be really chasing something that could run up pretty quickly. So there's a few charts today that are actually performing very well. Netflix, NFLX
Here we go.
is about to break. It looks kind of like it's really
yeah.
going to go for a run.
Yeah,
This stock.
it's make or
Yeah.
break right here.
It's a kind of a cup and saucer type of thing, a cup and handle thing. Sorry. And then, but let's put up Tesla to compare it with where Boeing is today and where it eventually went. Because look, once they start producing again, obviously the stock's going to go through the roof. So here's Tesla. If you can go back to where we call the bottom, and it was a rough bottom, if you remember. Kind of made a double. It made a double bottom. If you could squeeze it up a bit more.
How far back do you want me to go?
About there. There you go. So you see how it came back and just took out that low by a fraction. Remember that? We were talking about that during the summer.
Right.
And look at where it is now. I mean, it's going to go. Looks like it's going to go into 2020, making new highs.
Now it's up against some pretty tough resistance, and we got a 1, 2, 3, 4. This is the fifth time we've been up in this area.
Yeah. Remember we said that about the S&P a month or two ago about the tough resistance and that it might pull back and it's just barreled on. Somebody came out yesterday, I think it was Bank of America, saying they're looking for 3333, which is my number, if you remember, a long time ago. I mean, this was my number about a year ago. I said 3333 was a possible number for the S&P, and I actually think that's going to be exceeded. I sort of said it's 3,300 to 3,500. So it was nice of Bank of America to come with to the same conclusion about a year later.
The next important mathematical target overhead, John, for the S&P, we ran those numbers today. Daily chart on the S&P up at 32.19. That would be a 50% Fibonacci price extension from this low that we put in October 3rd to the high put in on the previous all-time high on December 2nd. Now, look at the amount of time that it's taken us. I mean, we're talking December 3rd to December 17th, and we've almost done 50% of all this.
Yeah, exactly. It's
this thing's about to turn parabolic unless
we're in uncharted territory because of this breakup above the trend, which we probably 2 months ago we went through with Garrett. Remember when he put that chart up, and I said it looked really super bullish, and it's making new highs every day. Only got so many days left in the year. It really looks like we're gonna go right into 2020, probably on a high. It'd be interesting to know if we actually gap into 2020. That would be something if that happens. That could be a potential exhaustion gap on an annualized basis. So it's this market. Look, it's just like when we talked about the Fed coming in with there's a $500 billion of new money supposed to hit, be put into the markets in the next 15 days or something. There's never been anything like that. That's more than $1 trillion the Fed has put in. It's got to have, it is having an impact on the thing. Now, on the negative side, we've got a little, a bit of publicity about the 10,000th point. These kinds of things can be a little, detrimental to the market. Trump tweets too much about, the market that could hold it back as well. It's better just let the market do and be cool about it and appreciate the gains.
Exactly.
But it is a phenomenal situation that I haven't seen this full article in the Washington Post, but obviously they haven't talked about the economy very much, and they're finally kind of saying this is really something. And,
do you know what the heading of the article was, or the title?
Something like following August recession fears.
Washington Post. Let's try. August fears. U.S. economy shakes free of recession fears.
Right away. That's the one.
U.S. economy is heading into 2020 at a pace of steady, sustained growth after a series of interest rate cuts and the apparent resolution of two trade-related threats, mostly eliminating the risk of a recession.
Yeah, by the way, I think...
Oh, yeah, look at what you mentioned this earlier. Some forecasters back in August, many forecasters, some, they say, predicted a 50% chance of a downturn starting by the end of next year. Well, I mean, the end of next year is a long ways off, so
sure.
let's not count our eggs before the chicken lays them.
But, you know, ordinarily, when you get this kind of multiple new highs and, you know, the market going exponential, it just extends the ultimate downturn probably by a couple of years. You know, the advanced decline line has been leading the way all the way. Now you've got the SOX. I mean, look, when the SOX is making a new high every day, it just doesn't get any more bullish. The SOX is a leader. The only thing that you have to be a little bit careful of is the transportation index, which is not making new highs right now, and the mid cap sector. You know. So, you know, if we keep going up and it's not confirmed, new highs are not confirmed by the transports. And
all right, I only have end of day data on the transports.
Yeah, so there's nothing going on there today. So it's, you know, you're getting a pretty good picture really where it's at.
Okay.
It does look like it could take a run for new highs, towards new highs. And if it does make new highs, it just extends the life of the bull market even further. No, make no mistake, because, you know, if we went to 12,000, or say by the end of the year, which is not impossible, or you know, maybe 11 and 11.7 or something like that, we basically are generating a Dow theory buy signal, and we haven't had one in a while, so that would be phenomenally bullish potentially. Then, you know, along with the advanced decline line, new highs, and if the mid cap started hitting new highs, that would be sensationally bullish. I mean, it's almost like winding the clock back to 2016 and starting another 4-year bull market. And I have been thinking, you know, this is a little bit like getting into 1990, when they asked Robert Farrell of Merrill Lynch, who was a global advisor, you know, what do you think is going to happen in the 90s? And he said it's a boring decade of anemic growth. And he
That's
couldn't have been more wrong.
one of the most infamous quotes ever in the markets.
And you definitely can't say that about the 2020s, because I think the 2020s are going to be the roaring 20s. And so there is a real possibility, in spite of it all, that we could actually, you know, probably following some kind of a pullback in the early couple of years, because that's something that happens pretty continuously. It's just you know, the market has a habit of rallying into the end of the decade, which it's doing, and it usually stumbles in the first year or two or three of the new decade. Usually the second year, third year. Remember, we're also on the 20th anniversary of 2000, so we could do something similar.
Y2K. Wow, the world was definitely coming to an end.
Right.
Back then.
We could top out. By the way, this Greta, you know, she kind of went a little bit beyond her kind of pristine personality.
Are you talking about this young lady?
Yeah, she organized a picture of her sitting on the floor amongst her bags on a German train, and said she was lucky to get a ride back home on an overcrowded German train. She had a first-class ticket, so she got busted.
Check this out, John. This is Morgan Vague, a student at Reed College who discovered bacteria that turns plastic into harmless enzymes, potentially resolving the world's problem with plastic waste. She got passed up for being Time's Person of the Year.
Yeah, boy, did she ever. That would be phenomenal.
No. I'm saying this Greta got the Person of the Year, and this lady, this young lady.
No. I'm saying this one should have, for sure.
Oh, absolutely. I mean, we're talking about one of the biggest problems anyone that's concerned about the environment and the world at large, this is real. This whole climate hoax business, I can't believe we're still talking about it. I cannot believe the world is still anyway. So tell us the story of Greta again. Now she was on a train, on a German train.
She set up a shot
Uh-huh.
on this train where she was like in the, where the trains join. There's a kind of a space.
Yeah,
like
right.
She was sitting in there surrounded by bags, by her baggage, claiming that she couldn't get a seat on the train, but she actually had a first-class seat, according to the German train operator.
Here we go. German Railway claims Greta Thunberg lied about taking first class. My. It's just a bunch of hot air. A German railway company has taken back an apology they made to Greta Thunberg after they realized the climate activist wasn't schlepping it on the train's floor, but instead was treated friendly in first class. The rail company was responding to an image Thunberg tweeted of herself sitting amid bags and suitcases on the floor of what she called overcrowded trains through Germany. The company initially released a statement that said they continue working hard on getting more trains, connections, and seats. They also thanked her for supporting the company's battle against climate change and pointed out that the trains she used had been running 100% on electricity, blah, blah. But upon reflection, they said Thunberg's overcrowded claims were just hot air. The rail company claimed the teenager had a seat in first class between Kassel and Hamburg, and that other members of her team were already sitting in first class from Frankfurt onwards. It would have been even nicer if you had also reported how friendly and competently our team served you at your seat in first class. Thunberg then claimed that jam-packed trains were actually great and having to sit on the floor wasn't an issue. Oh my. She is the poster child for the left. It's a lot of hot air. Unbelievable. All right. What do we want to take a look at now? All right, I guess we lost John. All right.
Sorry, if you could put up Micron Technology again.
Sure.
MU. Sorry.
There we go.
Because I think, that's a pretty good idea. It's obviously got look at the way it spiked in 2000, and it's got a ways to go to get up there. So it's and the other one is AMD. Let's take a look at AMD because as we said, remember, we said this when the stock was $2. We said that AMD has a habit of
Advanced
a late
micro.
run.
Yeah.
Remember that when it was $2, Lorraine? I said it has a habit of having a late run, a late cycle run, and it's doing it to a T. It looks like it's going to hit all-time highs, this stock.
And AMD storage, that is their field.
Yeah, they've come back from no. They're the chip company, chip and video cards.
Video cards, okay.
And the chips.
You mentioned storage. You mentioned storage in regards to one of these companies earlier, but to just show how far storage capacity has come.
Yeah.
You can get a 1 terabyte thumb drive.
Yeah, that's amazing.
Here's a 2 terabyte thumb drive. Now, that's not right.
Is that $9.99? Something wrong with
That's
that.
not. No, that's not true. Well, I got burned the other day. I shared it with the audience. I clicked on something similar to this at Walmart, and it said it was a 1 terabyte for $9.99. Okay, except there's nothing inside. It's just the case. It's very misleading, very deceptive. It was such a great deal. And I thought, well, it's Walmart. Of course, I can trust Walmart. What was I thinking? So I bought 3, not 1. I bought 3, and then I realized I went to look at the reviews, and the reviews said there's nothing inside. And so I immediately went to cancel my order. There was no button to cancel. It said you can contact the company. So I contacted them and canceled my order twice. My wife even logged in and canceled it just to make sure. And I got, of course, 2 days later, what shows up on my doorstep? 3 little empty boxes.
What a ripoff.
I can't believe it. Walmart, I don't think they're duplicitous in this. They're not. They have too much at stake to fool around with this kind of. Let's see what these reviews say. Now here's 128 gigs for $50. Well, that makes sense. Here's 16 gigs, for $7. That makes sense.
That's a hell of a deal. That's actually.
Yeah, no, it really is. Let's see what the reviews are on this thing. That's be the first to review this item. Well, let's see. Is that the one we looked at? Okay, let's look at this one. See if this one could be legitimate. $30 for a terabyte. See if there's any reviews on it. Is it real? Does it really contain 1,000 gigs of storage? It shows 976, but it corrupts video files after 160. Good price, but okay, so apparently this one actually has something inside of the box. Is it shockproof? Yes, it's very rugged. This product has manufacturing defects, and I couldn't try it. So, be careful, guys. I mean, it is possible to get an incredible amount of storage in a very tiny device, but apparently people are taking advantage of folks. 1 terabyte of memory in a flash drive. I'm building an NAS server for backup files from the computer and phones using a Raspberry Pi, and didn't want big hard drives, blah blah. The price is better than a hard drive, so why not try? Okay. For my surprise, it's working better than I expected, is faster than what I anticipated, and is very compact. Amazing technology. So this one actually appears to be the real deal. Okay. What do you want to look at now?
The grains. I think let's have a look at the beans. They're, and the wheat as well, the wheat in particular.
Okay. Soybeans. Come on. Soybeans. Let me get it on a daily. There you go. All right, here's a daily chart of beans. This is a key area right here. I mean, there was a swing low that held. This was good support for a while, which then became good resistance, and we're up against it one more time. So this is kind of a make or break situation right here for soybeans.
I think the way to play the grains right now is to buy pullbacks, by dips, because it could. Your wheat in particular, wheat is leading the way. It's
Here's
really,
wheat.
Wheat is pretty much at a multi-year high here, and if you could go back a bit, see where we have to go. There's a huge base on this, and kind of a reverse head and shoulders. So we could see wheat prices going up to 750.
Yeah, there's obstacles along the way, but there almost always is. Got an obstacle there at 580 and $6, $6.50, $7. Yeah. This looks like it could make for some good trading on the way back up.
Yeah, why don't you put up USCI, Dwayne? That's the commodity index.
USCI, okay. That's a daily chart.
Yeah, I've got that nasty. I'm trying to get rid of that spike, that mistake.
You're talking about this right here?
Yeah, but it's actually looking like we could have put in a bottom here last September. You had the rally up and then now we might be ready for a decent move up next year in this thing.
Okay. Anything else?
Yeah, let's have a look at the FXI, Chinese stock market. It's really a long way from where it was a few months ago. It's really starting to look pretty good. It's not, it's got to, you know, there's a possible double top here.
So is this the Chinese version of like the S&P?
It's, yeah, probably.
Or something
Yeah.
similar, or it's an ETF?
Yeah, large cap ETF.
Okay.
Yeah, you put up the EDC, which is the, you know, the world index, or EEMM is the other one. EDC.
EDC? Okay.
Yeah.
There we go.
Yeah, I mean, it's really starting to look pretty good on a breakout basis, and if you go back to 2000, see where this thing can go. It's, you know, it's got a lot of upside potential.
Yeah, it looks like my data doesn't go back quite that far.
Listen, I might have to run. So
Okay, John.
thanks for
All right, we'll
see
catch you tomorrow.
Bye-bye.
All right, bye-bye. Okay. All right, so we covered the S&P. Concierge Trade Alert last night said to consider being long 31.98. On the initial trigger, ran up 4.25 points. Back below the trigger, second run was good for 5.5. Back below the trigger, 4. And this current move put in a swing high at 32.01 1/4. So that's 3.25 so far. Something uniquely different about our alerts. You may have noticed, I don't know. With most alerts out there, not all, but most that I'm familiar with or have seen, it's typically a one-shot kind of deal. Really important to understand the numbers that I provide, the alert prices that I provide, are uniquely different. As you can see on this chart, and it's not just this chart, but if you go to our recap archive at youtube.com/CFRN, you know, go back a few weeks, a few months, even a couple years, and you'll see this. I don't want to call it a phenomena, that seems a little far-reaching, but it is unique. If you get a good trigger and a good move, there's a high probability that it will trigger a second time. And it's not unusual to see 3, and in this case, what do we have? 1, 2, 3, 4 so far. And with time left in the day, we won't rule out that there could be, you know, a 5th trigger. Okay. All right, let's go to the Dow. Now, any one of these moves would be sufficient for most traders to call it a day. We had a gentleman who was a guest on the show. It's been quite a number of years ago. Michael X. Now, he was the real deal. In other words, he wasn't just, you know, putting on a front and blowing hot air. We were able to vet this guy and determine that, in fact, the things he was telling us were factual. And he was brought on as a guest of my previous co-host. And actually, we interviewed him a number of times. You can listen to those interviews if you Google CFRN Michael X interview. I know he was on it at least twice. I think it might have been 3 times. This guy trades 10,000 E-mini contracts a day on average. Sort of an institution unto himself. Now, he doesn't put on 10,000 at one time. He's a guy that trades bell to bell. He specializes in trading news when there is some. Think about that. 10,000 E-mini contracts a day, on average. I think primarily S&P. I asked him during one of the interviews what he considered to be a good day in the market. I was expecting a dollar figure. You know, I was expecting him to say, well, I look to make 50 grand a day or 100 grand a day or whatever. I had no idea what his answer would be. He answered the question in a way I did not expect. He said, for me, a guy who trades 10,000 contracts a day, he said, for me, any day that I can take 2 points out of the market, 2 points out of the S&P, he said, that's a great day for me. I was speechless for once. I wasn't expecting that kind of an answer. The fact that it resonated so well with our audience, because that's the very thing that we teach all of our students. It's what we do. If any day that you come into our live training room, you'll see us working towards a goal of $100 per contract, which is equivalent to 2 points in the S&P, 10 ticks in crude, 10 ticks in gold. Think about it. 2 points. A guy who has the financial wherewithal to move that many contracts, for him a good day is the same as what, if you're a brand new trader with us, maybe you've been through some stuff and you got some bumps and bruises, but you haven't given up. In fact, you decided to get up one more time. I'm going to get back up. You get back up, you become a part of the CFRN family, whether you become a partner or a passport holder. We're going to teach you our method, our methodology, using our indicators, how to take 2 points a day out of the market. Now, we're not going to stop you from taking more out, if that's your goal, if that's what you want to do. But long before we ever met Mr. X, that's what we were teaching our students. We didn't suddenly change because greatness appeared before us and we wanted to emulate that. No, to us, it just served as confirmation that we were on the right track. We're on the right path, swinging for the fences, trying to hit the home run every time you step up to the plate. It's the very thing that destroys a lot of traders that could have, possibly had a great career as a consistently profitable trader. That reaching for the fence gets in the way of consistently profitable success. So on any given day, today as an example, Mr. X could have bought 31.98 per hour alert, and he could have, got his 2 points there. Or he could have done it here, or here, or here. Now, I don't know his exact trading strategy. I did ask him how he came to trade that many contracts, and his answer was equally interesting. Kind of mirrors what we teach. He said, well, I started out with one, and I did okay, so I added another one, and as I continued to do well, and then I added some more. Now, listen to the interviews, and you'll hear it. And you can tell just kind of from the tone of this guy's voice, he's not a chest thumper. He wasn't bragging about his exploits in the market. In fact, I sort of had to pull some of the stuff out of him. You can tell that he's not someone accustomed to doing interviews. In fact, I don't know that he's ever given a public interview other than the one that he gave us. But I'm going to guess that, like so many traders, if he says 2 points is a good day for him, I bet every day's a battle. and he's working this, and he's trying to catch that, and he's doing this thing and doing the other thing, and I'm sure he has lots of very sophisticated indicators and oscillators and algorithms, and I'm not knocking any of that stuff. Hey, whatever gets you through the night or the day, depending on when you trade. But a lot of people work really hard to put up a couple points a day in the S&P. In fact, 2 points sounds like nothing. I bet you it's the most elusive goal on Wall Street. Consistently taking a couple of points a day out of the market without losing your shirt in the process. How could something so simple be that elusive? All I know is if it were easy, everybody would be doing it. But everybody's not doing it, are they? Trading isn't easy. I'll never try to tell you that it is. What I will tell you, and what I've been telling you for years, it can be simple. There it is. Trading's not easy, but it can be simple. How simple? It could be as simple as buying 31.98 and taking your profit when you reach your goal for the day. And somebody said, is this guy for real? Yeah, no, I'm for real. I could hold up a newspaper with today's date on it or something if that would help you get the picture. Seriously. I'll never try to tell you it's easy. But Michael and I are willing to show you how simple it can be. I noticed there was a question in the chat box. In fact, I hadn't even opened the chat box, so let me see this. Richard asked, what is the symbol for Aramco? I wish I had seen that earlier, Richard, and I apologize that I didn't. I don't know the answer, but Aramco. Well, looks like there's, I don't think I've ever seen a symbol with a number in it before. Oh, okay. I take that back. I have. It's a futures contract. These are all futures. You got propane, butane. So let's look at the. Oh, they got an E. There's an Emini. What do you know? Okay. So if I want to look at the Emini, the propane, and let's just go to the continuous contracts here. And let's put it on daily. That gives you an idea how many, how many months this thing's been trading. Wow, I don't think I've ever seen a chart quite like that. Let's go to a daily and see what that looks like. Apparently, there's not a lot of volume. Let's take a look at those other ones. Let's take a peek. Aramco. Did it all take us to the same place? This is a different one. Okay. So, let's see what we got. It says loading. I'm going to see if I can pull it up. Aramco. Oh, excuse me. Since they say there isn't, that symbol is MAA. MAA. Yeah, I get nothing on Daniel's trading. So, Richard, if you remind me tomorrow, I'll ask John and we'll try to get an answer for you. Okay? And also in the question box, Don posted a comment, I guess. Doesn't this all seem like tulip mania? It just irks me to death that the government manipulates the market. The market is supposed to be a private, functioning place. Okay. So I guess, Don, what you're referring to, correct me if I'm wrong, is that the market is at all-time historic highs? I mean, I don't know if this is in particular what you're referring to, but what we're looking at here, this is created to go higher over time, and I know that you already know that. This is representative of 500 large cap companies that have met a lengthy list of qualifications that got them included in the S&P 500. And when one of them gets sick, one of them misses their numbers a couple times, they take them to the curb, they bring in a fresh young bull. So over time, this market is always going to go higher. There will be pullbacks, there will be the sky is falling period of times like we saw back when real estate crashed. All that and more, but over time, we'll just keep climbing. Don says yes, and nothing has really changed from a year ago. So Fed manipulates to keep people placated. Can you give me an example of how they do that? And when you say the Fed, I don't know if you're referring to the Federal Reserve or if you're referring to the federal government. No 401k losses or pension losses. Well, that's a good thing, right? I know there's always times when we think, oh my goodness, this is the top. The market can't possibly go any higher. But it does. And there's times in the midst of a sell-off that we get clever and go, man, I know this thing can't go any lower than this. But yet it does. The market has the ability to stay liquid far longer than any of us. So there was a time when I tried to outthink, outsmart, outrun, outfox the market. And I realized that that day was never going to come. And so I surrendered. I waved the white flag and said, you know, whether I agree with it or not, from this day forward, I'm just going to do whatever the market does. If it's rallying, I'm going to be long. If it's tanking, I'm going to get short. And that's what I love about futures. The ability to be nimble, to be long, to be short, and to be long again, all in the same trading session. That's a beautiful thing. All we need is movement. And as we mentioned, this is a lack of movement. I think we determined earlier that we've got a 12-point range on the day, but using our methodology, using our alert service, I mean without the indicators and without the methodology, although we don't encourage that. I don't ever want anyone to trade my alerts just because it's my alert. It's a learning process. I want every single partner and passport holder to learn how to do exactly what I do. That's the goal. The goal is to teach you to no longer need me or anyone like me. But in a sideways market with a 12-point range over the past 24 hours, there's a 4 1/4 point gain, 5 1/2, another 4, 3 1/4. Now that's what the market made available. I didn't make any of that available. I don't want anyone to misunderstand me there. All I made available was the alert. Once I do that, then it's up to you and the market. But if you have a 2-point daily goal, we can see we're getting along at 98, either here, 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 or here. That would satisfy the daily goal. And some who aren't real familiar with futures, and I know that you are, but some who aren't familiar with futures might go, 2 points? What? How in the world can anybody make a living with 2 points? Well, 2 points and one S&P contract, that's $100 for the day. I realize most people can't pay their bills on $100 a day, which is why our students, once they increase their account balance by $2,000, they take the profit that they've earned and add a second contract. And then following our 24/20 blueprint, they'll know when it's time to add the third and the fourth and the fifth. By the time you reach your 10th contract, if your goal is still just a meager 2 points a day, that's $1,000 a day. It's $5,000 a week. It's $250,000 a year. And according to a statement made by President Obama many years ago, $250,000 a year makes you one of America's wealthiest. I don't put a whole lot of stock in much of anything that he said, nor did I need him to inform me that anyone who makes $1,000 a day is part of the top 3%, not just of America's wealthiest, but of the world's wealthiest. That's food for thought. Now, before everybody gets all lathered up, don't forget, 9 out of 10 new traders will fail. For one reason, because nobody ever taught them how to trade. It's that low barrier to entry that's so seductive. Creates the illusion that yes, if it only costs a couple grand to open an account and start trading, it must be pretty simple. When it's the polar opposite that is the truth. Looks easy, but it's not. It can be simple, but 9 out of 10 people never take the simple path. So, the simple path is to find a teacher, and of course it doesn't have to be me, nor does it have to be Michael. It does have to be someone, though, who, after you pay them, will give you more than a hearty handshake, a pat on the back, and a PDF that says, go get him, Tiger. The teacher, whoever your teacher is, whoever you find to teach you how to trade, needs to be someone that's willing to make a personal investment in you via their time, their talent, and be there to pick you up on the down days. Somebody who not only will show you the way, but when Humpty Dumpty falls off the wall, as you inevitably will, they'll be there to help put the pieces back together again and help you get back up on the wall. Okay, on to the Dow. Okay, last night, Concierge Trade Alert for the Dow said, consider being long. And if you didn't get a screenshot earlier, guys, here's another opportunity. 28305 for the Dow. 28305. Okay. And that's going to be right about where we are right now. Okay. There we go. That's pretty close. There it is. 28305. Now this first move up took us all the way to 17. It's 12 points. That elusive $100 a day in the Dow requires 20 points, because unlike the S&P, which pays 50 a point, the Dow pays $5 a point. So it takes a 20-point move versus a 2-point move. Now this next move up made it to 23, and again the entry was 205. So from 205, this first move up took us to 17. Next move up took us to 23, and we finally put in a swing high at 45. So that's 40 Dow points at $5 a point. It's $200 per contract traded. However, getting out at a swing high only happens when you get lucky, because no one knows a swing and that anything's a swing high or a swing low until after the fact. It's clear to see that that candle right there was a swing high, and that was a swing low, and another swing high, and another swing low. But that's after the fact. This is part of the importance of having a goal, reaching the goal, taking your profit, and exiting stage right. Because it can and will turn on a dime. Now, the fact that we sold off right there at 28345 really isn't a surprise. We knew that was an obstacle. Just based on the previous swing high. And that's a perfect example of what I mean about trading's not easy, but it can be simple. I'm sure there's lots of good folks with very powerful computers that had algorithms grinding all night long to prophesy that the swing high in today's session would be 28,345. Some of them probably nailed it, some of them probably didn't. I was asleep, to be honest. I didn't need a powerful computer or an algorithm, because I can look left. Thank God my head still turns. I can still look left. And I know what an obstacle looks like. Now, when price approaches an obstacle, one of two things is going to happen. It's either going to power through it, or it's going to reverse. Yeah, I know sometimes it'll go sideways and grind a little bit. It's either going to take out the obstacle, and if it can't take it out, it's going to go in the other direction until it finds support. Now, is it likely to find good support right here at 23205? Yeah, it's possible. Okay, let's go to the Russell. Maybe we'll check back in on that before we go. Okay, here's the Russell. Last night, the alert said, consider being long 1659. We just managed to get there. 1659. Come on. 1659. So there's been no money made there as of yet. Now the short side of the Russell was 1652, and the swing low here this morning at 5:30 a.m. was 1651.10. That's it. That right there is the truth about trading. Price is going to move between support and resistance, back to support, back to resistance. Support and resistance is defined by these guys, buyers and sellers. What price is a man willing to pay for a Russell Emini contract, and what price is a man not willing to pay at this moment in time? The answer lies not in indicators and oscillators and patterns. It lies here in the order flow, the buyers and the sellers. This, if there's any magic to be made, this is where it happens, the order flow. Looking elsewhere for the answer is a fruitless endeavor. Okay? All right. All right, let's go to, let's see, we did the S&P, we did the Dow, we did the Russell, NQ. Okay, on the NQ, consider being long 8607. 8607. That's going to be about right here. Okay, 8607. And we hit it. Well, this is last week's zone. That's last week's highest weekly trading zone. Remember, partners and passport holders have this week's zones in their pocket Monday morning, 6:15 a.m. Eastern. Okay, so from the trigger, just to the zone. We'll forget about the spike above it. From 86, is it 06? No, 07. Up to 86.20. That's 13 points. The NQ pays $20 a point. So it's $260 per contract traded. That was the first trigger. Then we got a second trigger. Basically took us up to the same place. Support and resistance. Buyers and sellers. Now, were there too many sellers for buyers to get through? Or did buyers simply have no interest in paying a higher price? Because, trust me, there was plenty of inventory up here to be bought. But apparently none of the buyers en masse wanted to pay that price. Now, when that happens, price is going to go looking for what people are willing to pay. These guys, the magic makers, the buyers and the sellers, the order flow, right there. So we ping pong back and forth from support to resistance to support to resistance to support. Okay. We did the S&P, we did the Dow, we did the Russell, we did the NQ. All right, this is the last time we'll be looking at GCLF this year. We rolled over in the live room this morning to the G contract. So tonight when the alerts go out, it will be for the G contract. Now, last night for the F, we said to consider being long 60.25. Scrunch it up there. Let me open it up. There we go. Okie dokie. And the alerts came out at 8:55 p.m. Eastern. So that was right. Would have been on this candle right here. Okay. And the clarion call was to be long 60.25. So there's 25. Okay, on the initial trigger, we ran up to 60.35. That's a $100 per contract move. 10 ticks, $10 a tick, $100. Important prices, important areas, almost always tested. Let's see, on the S&P, did we test it? Yes, 1, 2, 3, 4 times, and we're working on number 5 right now. On the Dow, we triggered once, twice, triggered 3 times, only one of them meaningful. On the Russell, not the case. On the NQ, once, twice, twice meaningfully, and we're working on a third one. We've been working on it for hours. And so crude, we triggered twice, and from 60.25 up to 61, that's a $750 per contract move. Now, this is an extended move. Extended simply means that each market has an average swing. If you become a partner passport holder, I'll just teach you how to find out what the average swing is in the market you like. It's not rocket science. It's pretty simple, but I'll teach you. So I'll put the indicators on. Okay. We got an exit signal almost. Okay. Now the rules, the letter of the law says, when the step line crosses blue and climbing on a long trade, what we're looking for is the first red candle that closes below the step line, that's the black line, after it crosses. Okay? So we crossed a number of times, but this one right here almost closed below the step line. One more tick, and that would have been the exit signal. Now, just because it's not the exit signal doesn't mean you can't get out there. I mean, you've had a magnificent run, and you know trees don't grow to the sky, so you're going to have to take profit somewhere. So even though this didn't give you an official exit signal, still wouldn't be a bad place to take profit. This candle may very well provide the official letter of the law exit signal. All we need is for price to close right where it is. Oh, not anymore, but right where it was, right below the step line. That's the market telling us that this move seems to be running out of steam. So if you got profits, lock them in or take them, because price is always going to revert to the mean. And for us, the mean is just this green line. We call it the BBC. When price is above it, we anticipate higher prices. When price is below it, we anticipate lower prices. Like this. Once price gets below it, below the green line, happened right here, we anticipate lower prices. Then price is going to revert to the mean, means it's going to pull back. As long as it stays below it, we continue to expect lower prices. And when price is doing this number, above and below, we know to stay the heck away from that until it finds its place in the sun, like this. This is what we want to be a part of. Not this. No. This. Okay. One last market. Gold. Speaking of gold, black gold. Texas tea. The Beverly Hillbillies mansion. Yes, that fabulous mansion with the cement swimming pond that we all grew up with, recently sold for the highest price of any home ever sold in California. Alexa, tell us the Beverly Hillbillies story.
The Beverly Hillbillies can be yours free from Audible. You'll get
Alexa,
this audiobook and enough.
Alexa, Beverly Hillbillies house.
Would you like to start an Audible trial and begin listening?
Alexa, stop. Alexa, what's the Beverly Hillbillies story?
The French neoclassical style mansion seen in the opening credits of the Beverly Hillbillies is now effectively the most expensive home ever sold in California. Fox News reports the Chartwell estate is located in Bel Air and reportedly sold to Fox executive chairman and CEO Lachlan Murdoch. The house was constructed in 1933 and boasts 18 bedrooms, 24 bathrooms, and a 75-foot cement pond, aka the swimming pool.
There you have it. Who'd have thought? What a great show. I mean, come on, guys. Who didn't love Ellie Mae when you were growing up? Yeah. And then there's Granny and Uncle Jed and Milburn Drysdale, the banker. Good times. Okay, last night's alert on gold. Consider being along 1482. That's going to be right here. 1482 sent us up to 83.80. That's $180 per contract traded, back below the trigger. From 82 up to 85. It's $300 per contract traded. And this one here took us up $100 per contract traded. And we're currently back below the trigger. Flip side of that's way down here at 1475. So nothing going on there. Okay, let me look at the chat box again real quick. Not artificial. Yeah, I'm not sure what that comment meant. Artificial is not good. Okay. Market only goes higher continuously because people know the government is going to backstop them. Okay, so what you're saying is it's easy for people to make money. They only have to go along the market because nothing bad will ever happen and the government will take care of them. Okay, I never really thought about it that way. MRT, I guess market high returns need high risk to compensate. But there is no risk with government backstopping the market. Well, I guess you should take that as good news. That means you can go out and make as much money as you want to make tomorrow because nothing bad's going to happen. The government's going to backstop you, right? I don't know if I'm understanding this correctly, but I'm trying to. And the last comment. So then I guess all we need to do is go along the S&P and hold forever. No trading needed, guaranteed win, and don't even need to watch the market. Well, it appears that that's what you're saying. I did say that the S&P was built to go higher. It will always go higher over time because the weak companies get kicked to the curb and strong companies get brought in. So that's not a theory. It's just a fact. It's how the index works. Now, the market and the economy are two entirely different things. Often those two things get confused when the heads start talking on the financial programs, on TV, on the internet, on radio. So anyway, let's go to our good word for the day. But yes, if I had to make a decision by the S&P, if somebody put a gun to my head and said, brother, you got one trade left, what's it going to be? If I could only make one trade the rest of my life, absolutely, unequivocally, it would be to go long the S&P 500. Because gold, guess what? Gold may go down, and it might stay down. Crude might become no longer necessary. Maybe everybody gets an electric car. But the S&P, by its very definition of how it's put together, until those rules are changed, it's going higher. So yeah, that would be my choice if I had to make one. And thank God I don't. So, all right. Good word for the day. The church today is faced with a lot of challenges. I'm sure I don't have to explain that to anyone. So much going on in the world that, just flies in the face of what we as believers believe and profess. Ephesians 3:10. God's purpose in all this was to use the church to display his wisdom in its rich variety. So here are three standout challenges that the church faces today in the time in which you and I live, right here, right now. We can't experience a new move of God if we insist on clinging to an old one. God's purpose in all this was to use the church to display his wisdom in its rich variety. The word revival doesn't simply mean awakening something that's asleep. It also means resurrecting that which is dead or dying and causing it to come to life again. God's purpose in all this was to use the church to display his wisdom in its rich variety to all the unseen rulers and authorities in the heavenly places. That's the full scripture. Challenge number 2. We fear excess, so we embrace mediocrity, and somehow we call that a good balance. People aren't drawn to us because of our similarities, but because of the things that make us unique. When it comes to our faith and our testimony, we mustn't downplay, soft-pedal, or sidestep the very things God has given us that make us distinctive. If we do, people will be disappointed and go elsewhere. The disciples did not blend into the crowd. Their message and the demonstration of its power made them stand out wherever they went. And we know that because they made that stand, because they stood out, life was not always simple and easy and cozy for them. They were not embracing mediocrity. Challenge number 3. We need to make room in the church for risk takers and faith walkers. In the first miracle Jesus worked, changing the water into wine, Mary told the servants in John 2:5, do whatever he tells you. I can hear the resignation in her voice as if she were standing here right now. She raised this child. As a good parent, don't you try to tell your children what to do? At every hook and turn, right? Imagine trying to tell this child Jesus what to do. Now, some children are very bright and perhaps ahead of their years. What do we call them? A precocious? Is that the right term, precocious? Can you imagine how frustrating and often infuriating it had to be as the mother of Jesus? I hear it in her voice when she said these words. Just do whatever he tells you. She had gone against the grain before. She had tried to correct him. She had tried to show him the way, when in fact this child was the way. You say no way, and I say way. In the church today, too often, our need to be liked and to be popular can lead to a religious spirit that cripples risk-taking and faith-walking. Jesus made us a promise It's in Acts 1:8. He said, "You will receive power when the Holy Spirit comes on you, and you will be my witnesses." Ever heard of Azusa Street? If you haven't, Google it. There's a real turning point in this thing we call Christianity, just as it was in that upper room. Again, Acts 1:8. You will receive power when the Holy Spirit comes on you, and you will be my witnesses in Jerusalem and in all of Judea and Samaria and to the ends of the earth. So friend, whether you're a pastor or a member of the congregation, we're all part of the body of Christ. So whatever your station in life or in the church, when God tells us to do church differently, let us not be afraid to step out and obey him, just like the disciples did. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.